following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. We're going to get right into some of the volatility that's happened overnight with the Chinese situation. And, the S&Ps obviously had a little bit of a bounce off some numbers we talked about yesterday. And, the big question is, what do you do now? We're going to go into our heat map grid really quick. This is our weekly. This is our daily. This is the global situation, believe it or not, on an intermediate time frame. We've got basically every index in the world on an intermediate time frame that's trading net below profiles on the internals, and the S&Ps are no different. Even with that little bit of a bounce, still very, very negative breath relative to our profiles, not relative to price action. Price action is a part of that equation, but there's our 4 hour, here's our 1 hour. I'm just going down the line here. A couple of green shoots here on the 60 minutes for a couple of indices, but really, and again, we talk about the 1 hour breadth crossover as a system in itself to trade an index. But just want to give you the lay of the land on that. Excuse me. And as we drill down into, we're just going to go into the S&Ps here. And we're going to look at, what's been the mantra here of the S&Ps. Here's our weekly, expanding actually on our weekly breadth to more negative connotations. I'm going to kill our in between here. So, what does this mean? We started this process really about June 4th from being, long-term breadth positive for a long time. But as you can see, was kind of, trending down, if you will, as far as that positivity. And at the same time, we had some very mixed up signals here on our daily for just a long time. So now that's expanding. This is our 4 hour. We got a really good signal recently around July 17th on the short term, and on our 60 minute, basically, we've really kind of stepped on the gas pedal as of the 23rd. So, what's changing now? On our local S&P index here, we're going to take a look at what we had kind of alluded to yesterday, which was, let's let this thing get down ultimately into this 2060 area. Let's let it go below just to kind of, see what's going to happen. And if we come back above, then it would be time to start looking at, if you must day trade this thing from the long side, that will be the opportunity, and then stops below 2060. But again, we're not a big fan on a long-term basis of going long the S&Ps, in my opinion. Like we talked about recently, where's the risk? Where's the higher risk trade? The higher risk trade is to be long right now. So therefore, the lower risk trade will be short, conversely speaking. And as we look at this, that action yesterday, that 2060, I think we reached a low of what yesterday, 2056, 2057 rounded off. So we've had a nice little bounce. And again, what's the tone here, and how do you trade this? So let's just keep fishing around some of the profiles here. And I'm going to go back to my scanner, and I'm going to go to my futures section. And I'm going to be painted all these inflection points that we just spoke of. There's a 2085.5 bottom of the profile on the daily that we just showed. There's 2060. And, these green shoots here, this is kind of what we were talking about. Let's get some green shoots, and let's get back above 2060. And here's the 240s. So first time we've had a little bit of a breakage of profiles, but remember, long-term takes precedence over intermediate over short-term. So we're going to just kind of, show you what's going on here relative to profiles across the board. And then we're going to say, you know what? It would just be flat out awesome to rally back up into 2085.50 now to give us a really good area to pick a battle. And the reason I say that, and it works time and time again, I'm going to go to the Shanghai just to give you an example here. We talked about waiting patiently for so long for this Shanghai to get back up into that maximum leverage point around 42.06. We had 41.84, got into the neighborhood. Remember, weekly moves, give yourself a little bit of a neighborhood feel around these inflection points. And then we've actually caved down into the 35.54 area. We reached a low yesterday of 35.37. So if you can see how cool it is to kind of wait till the market comes to you, we're going to take that same stance on and same concept on the S&Ps. Now, these are, guys who are trading, long-term investment portfolios. This information obviously is a little bit more timely and intra-week, sometimes intraday information. For the long-term guys, what I want to say is, and just keep in mind that the tone of the globe and the tone especially of the S&Ps, the tide of the marketplace, as Basil calls it, it's not time to step in large. And this will tell you when it is time to get back in the water on the long side. Right now, it's either cash or hedge. And that's kind of the way I want to, that's kind of the, what I want to basically impress upon you today for the long-term guys. The short-term guys, we've got two options, in my opinion. Because of that overhanging negative breath, we want this market to come up to 2085.50. Keep an eye on the breadth. Make sure the weekly and the daily are still negative. And it would be super cool if the 60s and the 240s rolled over negative around that area, but that remains to be seen. The other option is waiting possibly until we get back down into the fair auction. Remember, we're not really looking at long opportunities except for a little bit more dangerous trades from the long side based on trading against a long-term trend down. 2071, we'd have to cross that border and start kind of, 60-minute breath, starting to get some crossover to negative territory. Then I'd feel very, very comfortable about shorting it. So the numbers are really for today, 2085.50 and 2071. And let me make sure that's 2085.50. Yeah, 2085.50 and 2071. So we want to get below 2071, have our breadth situations on our S&Ps, and the 60 minutes, again, we're going to open and these numbers are going to move around a little bit. There's a lot of earnings out there. And by the way, consumer confidence is at 10 o'clock. Schiller home price is at 9. So you got to be aware of those numbers coming out. But that's the way I'm looking at it. I want to see 60-minute and possibly 240s get negative below 2071, or these stay negative up into 2085. So that's kind of the intraday situation. Now, how do you trade in individual stocks based on that? So you're drilling down in, first of all, we want to get, what's the MO for today and for the long term on the index itself? And then, what side of the fence should I try to trade internals of that index based on that? So what we're doing, and I think, there's a couple of stocks out, a couple baskets of stocks out with earnings today. But what I want to do always is I want to find, what's been kind of and has been showing its hand. Quite a few opportunities here that we've talked about that have worked out quite well. Apple, we're going to take a look at. This is interesting because we're kind of sitting on the cliff again here with Apple. And that number 2 there, we talked about. And I'm going to go into an app. I'm going to just drill down into a few internals here. Apple, for starters. This is that, weekly we talked about now using the 124.70 as leverage. Market came back to us on the close on Friday, and that's kind of going to be the stop out point up top. We've talked about that yesterday and the past couple of days. But what we're going to do here is look at the scanner and just kind of peruse, and Avon products, my God, that's just eternally on the short list. Sub $5, almost sub $5 now. Bed Bath & Beyond, that's been one that's just been kind of shooting fish in a barrel. Has anybody ever shot a fish in a barrel? I don't know anyone that's ever shot a fish in a barrel, but it might be that easy. So let's take a look at, we've gone over these so many times, but there's still, again, successful trading is supposed to be boring. These are stocks that are showing their hand. They're not going to give you like a 30 or 40 $1 a share downdraft like Amazon did the other day. But again, those are riskier trades, and you want the excitement. Ultimately, you're going to pay for it. That's the way I look at those. So again, those are intraday opportunities against the long-term trend up on stocks like that. But these are ones that, CBS Corp, CSX, this is one we've been pounding the table about. Still waiting, to see what the S&Ps are going to do. Then I would just start acting based on the scanner. Fossil, these are Fluor Corp. These are, ones we just can't stop saying enough about on the short side. And again, it's nice to see how these things unfold. It's a great, what you might want to do is just kind of write your list down of things that are, showing their hand in the scanner, long or short, or weak or strong, and then see how they act in moves like this. And this is the crux of relative strength trading. And the cool thing is having a barometer of the index itself, hopefully with these speedometers, are going to allow you to, even if you're wrong and everything reverses the other way, these type of scenarios theoretically won't be that painful. Now, they can be. That's what stops are for. There's International Business Machines, IBM, of course. And we talked about the stops above now on IBM, above that 163.20 area. There it is in the scanner right there. And where's the targets on that? The targets, you got to let the 240s regulate your trade down. Michael Kors, oh my Lord, Kohl's Corp, I would guarantee Gap Stores is in here. GPS, yeah. There's Lowe's Corp. That's the one we've been, looking at a lot. Legg Mason. I still think we're going to have a lot of downside on the index itself, so that's why we're continuing to look at some of these. Again, I'm not a big fan. There's Weyerhaeuser. It's kind of been the gift that keeps on giving. But we, in my opinion, any type of longs right now would be very short-lived. And when we come back from break, we're going to take a look at some long opportunities and possibly how to trade those. I'm sorry, I had a glitch there. Possibly how to trade those. And, if the indexes do reverse and move up significantly, those are the ones that hopefully won't be as painful if the market moves down, but actually will give you the biggest bang for the buck if the market moves up. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Got the index overview out of the way and what the tone of that is and the inflection points. Those are delivered right out of the scanner. Wanted to get right into the healthcare XLV ETF. Again, this is no mystery to anyone. If you look at the chart, you don't need the profiles to understand that this thing's been in an uptrend, but very powerful levels around 73.05 on the XLV. But if this thing doesn't even pull back with the market kind of bouncing around here on the cliff of possibly caving in below 2060 on the S&Ps, you got to look at this balanced area here between 73 and 75.62 as a little bit of a collection area. It's going to be a little bit of a bounce around session here, possibly if the market caves in, or if it does bounce around this balanced area fair auction, is still along. And some of the stocks within, I'm going to go into the scanner and go into my ETFs here. And there's the XLV there. This is our daily ranking system. And as you can see, the S&Ps are just full of just red. If you go down the list, the XLV still looking quite well. And these don't incorporate pre-market earnings right now. Some of these reds and greens you see. So some of the things that are going on, there's Merck. Obviously, this is not reflecting, or Pfizer here. Let me go to Mark. And we're talking about strong stocks in a market that seems to be rolling over. I think Merck's out, right? Is that right? Anybody confirm that in the den? I think Merck's out. Anyway, here's the the weekly numbers on Merck. 56.38. Got to have stops down below on that one. And again, not a big fan of going short any XLV component right now, you've got way better opportunities on the short side looking at something else other than the healthcare sector. Here's Pfizer. Pretty sure that's out 34.98. So again, where we at on Pfizer in the grand scheme of things? It's been a strong stock lately relative to what's been going on. Here's the weekly view. And again, 33.82. I'm not a big fan of trading before earnings, but that's nice how that worked out. And then what do we got? 34.98. Let's just call it 35. So right now, do you buy this right after the earnings? I think you got to wait for a breakout again on Pfizer above 35.53. And obviously you had some opportunities in a collection area type fashion, down to 33.82. But again, I think the market's going to roll over a little bit more in general, and it may just kind of drag some things down. But again, these are stocks that are holding up very, very well, showing strength. Let's take a look at Ford. It's quite a few stocks before the market opens that have been having some earnings announcements. Okay, pre-market 14.96. Let's just call it 15. So again, where are we at in the grand scheme of things? There's the 15.04 on Ford, weekly unfair lows. These are all in the scanner. I'm going to pull it up and go right into Ford. I'm just going to search for Ford. There it is. Boom. Add. There's Ford. Okay, so now this is showing basically where the level of the market is right now, real time. And you see that number right there, 14.98, unfair highs on the week, on the daily, unfair lows on the weekly, 15.03. That's going to be a massive area for this stock to contend with. Why is that? That's because long-term inflection points take precedence over short-term, and this is not reflecting, by the way, pre-market prices all the time. We get this feed from a data vendor that's, pre-market. You always got to, these short terms are usually spot on, but pre-market, you've got a little bit of an issue here. Just letting you guys know, but this is our calculation of level of the market on Ford. So what do? Let me go back to the charts here and just show you that we're coming into this number, and we're also coming into this number, 1504. Even though there's some just incredible fundamental numbers statements out from Ford, the fact of the matter is, technically speaking, it's in a defined downtrend. Every time it's been selling off lately, we found resistance points daily regulating this trade down. Now we're back up into the top of the profile. To play around with this on the long side, you're going to have to wait and see if there's some technical damage to that trend. Getting a close above 15 right now, it's par for the course. It's actually a sell. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals and one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're finishing up with Ford. The theme of this is really, they've had some awesome fundamental news. We're gapping up a little bit into that weekly unfair low, daily unfair high. I'm a big fan of the market not going north in any large way right now. We've got some resistance areas to contend with. Don't get carried away right now trying to go out and buy Ford Motor Company right now. We're at some inflection points we got to pay attention to. Wait for a close above these inflection points if you're going to want to go long Ford. And if we kind of drift back down to the balanced area, I'd say all bets are off on this thing right now. Let's take a look at crude oil. You know, a little bit of a move up here this morning. But again, you know, let's just kind of step back and remember things on their lows go lower, things on their highs go higher. And there ain't a lot of big time change in trend here. Here's our daily. That was the weekly. Here's our daily. We go into the scanner. We go into the future section, and we go into crude oil. There's WTI crude oil. You know, again, not even the green shoots yet, really, that you want to see for any type of, you know, break in stride of this little situation. And we want to get back now at least above the 48 area, I would say, just to even think about starting to nibble on this thing. I'm just not a big fan of trying to, you know, this is the course of action. A lot of times people think it's on sale or think something's gone too high. In this case, it's gone too low. They start buying it, then they got to cover. They start buying it, then they got to cover. And all of a sudden, the guys who were doubling down on it and not covering, all of a sudden, I don't know what I'm saying. They all at one time have to try to hit the exit door in a massive move down, and that will be excuse me, the telltale sign that there may be a chance for this thing to change. I'm looking for a big washout where all these people who are dollar cost averaging, which I love how they made that sound so nice. I'm waiting for a situation where that is going to be the case, and I think possibly you should also. Can you nibble down here and make some points? Absolutely. Look what happened this morning. But you're playing a very treacherous game. If you're going to be the champion of picking the lows and picking the highs all the time, you're going to have knee surgery and all kinds of things along the way. There's going to be a lot of scars on you. So just remember that. That's the situation on crude oil. So getting back above the 48 general area is going to, possibly, and especially a close above there. The good news is on crude oil is if you're short, there's no new profiles attempting to appear here. You'd want to see at least a daily new profile attempt to appear. And what will happen if you're looking at the scanners, you'll see a yellow peel back right there in the daily area, just like you do right now in the Eurobond. And I don't see a lot of other ones here on the future section, but Shanghai, what a nightmare, huh? Oof. We've got the Shanghai, by the way, the only instrument in our futures section that's not a future. We didn't know where to put it. This is where most of the other indices that we track in the future section are, so that one's actually not a future. It says futures. Just want to explain that. You only get that information if you watch TFNN. Okay, so going back in, I want to pull up another stock here. I'm going to pull up IBM really quick. We talked about this when we looked at it on the scanner. And again, if you watch this show, this is kind of the bane of my existence. I don't like this company being long. This was a major, major squeeze that we actually kind of took a last battle area around 169. That was a stop out point, thank God. But now we're trading below profiles again on the daily. We talked about the leverage point, 163.20. I don't see a lot of changes in this. This company's got just a massive amount of issues. And right now, I think we could actually shoot for the lows around 150. And that's kind of what that's not my target on this. I think we're going to go much lower on IBM. So stops above 163.20 on this stock. Let's take a couple other looks at stocks, JBLU. My English is bad. Earnings out today. Again, if you guys are playing the airlines, I commend you. This is something you don't want to look at from the short side. And we've been talking about this. You're kind of at a little bit of a support area here around 22.36. Don't see a lot of risk in going long this stock. Obviously, the airlines are figuring out how to make money finally. This is United Airlines. It's the weaker of, got a lot of overhead with this company, by the way. You'd want to see a move and a close above 56.88 on United Airlines. I want to just cover one more, Delta, DAL. There's better stocks out there to short, put it that way. 44.38 breakouts above there. You got to buy those, and you got support around 42.33 on Delta. So that's the situation there. Let's take a look at Amazon. This is one that obviously had the volatility. Got a lot of emails about this. Still talked about not shorting this thing. Reasons being, we got that weekly profile below price action here. We talked about that's a very, very bullish sign. And, what do you do with it now? There's no new profiles here to hang on to, guys. You're kind of, climbing a cliff without ropes if you play around with this on a long-term basis. There's really not a lot of direction. That profile appearing well below, still way above. Here's the short-term numbers we talked about. 522 short-term support on Amazon. You've got targets up top now at 568.29. Still not a fan of shorting this. Those are the numbers to pay attention to if you're playing with plutonium there, trading Amazon. Going to take a look at Weyerhaeuser. This is one we've kind of been talking about on the short side. Still a big fan of this. And again, just letting you know, you don't have a lot of danger here. No daily profiles attempting to appear, nothing like that going on. And you got some new inflection points to kind of ramp off of here. 30-10, still on my short list. I'm going to take a look at 3M really quick. This is one we've been kind of continue to talk about, especially after we started having those weekly breakdowns here. This is at 156.21. It's a very expensive stock. Trade lightly on this. Share amounts, you got to always try to balance out when you're trading in your portfolio. My sister's a great example of this, of what not to do. She had, I think, she worked for Wachovia. She works for Wells Fargo now. She's been there over 20 years. 25 years, I think, actually. And the reinvestment plan that she ended up, I didn't know this. I would have probably been shocked to know this ahead of time. But in the pullback in 2008, she disclosed to me that she had 90% of her portfolio in Wachovia stock. My sister's not a trader. She's just somebody that goes to work every day. She very responsible person, a lot more responsible than I am, which is not saying much. But this is a great example of not putting all your eggs in one basket. What she went through, luckily, there's some, lists that have happened in the last 6 or so years. But 3M, just don't get carried away and trade something too leveraged out. Always look at your trading plan and try to monetize, balance out from a monetary standpoint. Don't get stuck in over leveraging a trade, put it that way. So 3M, in my opinion, is still a good short. New selling points, 150.42 on this. That will be letting the market come to you on 3M. A couple other stocks coming out this afternoon. Well, first of all, let's take a look at American Express really quick. The stocks in the XLF, this is one that has obviously been showing its hand. Not one of the stronger stocks in the S&P, but also not one of the stronger stocks in the XLF. So, here's the stops above 76.09 on the short side on AXP. I wanted to give you an idea of what the story is there, and I want to go into that ETF really quick. There's the XLF. A little mixed up on the breadth here. I don't know if you caught that. There's, still XLF is still, we're just smidgetly positive on the long term, but we're starting to get some rollovers here, and you got some opportunities here. I mean, we looked at J.P. Morgan, Goldman Sachs, Wells Fargo the other day as long possibilities coming down into those inflection points. A strong stock in a market strong stocks in a market that's been relatively weak, but you've also got some things in the scanner here that identify some short possibilities. BlackRock, Discover Financial Services, Capital One. But I'm going to pull up the XLF here. This is one that I just didn't think was going to continue to rise, but here's the weekly situation. 24.47 is going to be targets down below on the short side if you are trying to short this. But again, you've got better short opportunities out there, and you've actually got to be looking at 24.47 as support right now in the XLF. Here's JP Morgan. Starting to break down a little bit, but again, you've got better short opportunities out there. Here's the weekly. There's that bounce we talked about when it was happening. We typed into the scanner bottoms on weekly, and we found these stocks. So I'm going to go into the scanner really quick, and I'm going to go to my dashboard. I'm just going to go to the S&P 500 stocks here. And what we're going to do is we're going to look at what was sitting on support yesterday on the weekly and our daily at the same time. So Goldman Sachs and International Paper. Let's look at them. GS, another XLF stock. All right, so this is the action. We looked at it as a long the other day, actually, or something not to short. Now we're right back at the precipice, the cliff, if you will. And we're trading 206.81 right now. So guys who are long right now, you got to have stops below 204.28. That's right in the scanner here. There's that 204.29, excuse me. There's 204.28. So that's kind of the, Custer's last stance on this right now. You'd probably be better off not being in the stock below there right now. This is actually a long-term view, by the way. International paper, IP. Something else, the scanner's just saying, hey, we might have an opportunity here. This is not the buy opportunity. This is one that's saying, you might have a shorting opportunity below 47.24, and that's also relative to, what's happening here on the daily, which is 47.46. So again, a stock that is, pulling back with the market, a stock that's been down in a downtrend. You've got some opportunities here. So again, the scanner picked out just by doing bottom, a long opportunity and a short opportunity. And I'm going to go bottom top here for a second. There's no opportunities there. I'm going to go top, bottom. All right, now why am I doing this? Right now, excuse me, I'm sorry, I meant to say above the box, bottom. Okay, so what's going on here is these are stocks actually that are in a long-term trend up, showing strength, but have pulled back to almost a maximum support area on an intermediate basis. So Citigroup, Kroger, Microsoft. Let's look at those. Citigroup. All right, so again, let the market come to you. We've closed above, pulled back. This is Citigroup's support area, 57.64, and the scanner, by the way, 57.64, showing you right there. But we've come down into, coincidentally, a nice little area here, and this has been a runaway freight train, huh? 57.95. So that similar area, 57.95 paired with 57.64. You got some inflection points lining up here right now, and that's going to be kind of the stops below on Citigroup, in my opinion, if you're long Citigroup or looking for stocks to buy. Again, I'm thinking the market's going to head lower. We're probably going to possibly migrate up to 2085 on the S&Ps, and that's going to be nice if the breadths are coincidentally still short as we get up there. But Microsoft, let's take a look at that. Okay, so again, stocks are kind of hanging in there above the balanced area, but coming back into support, 45.19. That's your initial intermediate support on Microsoft. Again, this is a stock, not a fan of shorting it right now. We're going to come back after the break. We're going to look at gold, silver, and a couple other things that we usually look at pre-market, the euro and the dollar. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. A lot to cover the last 5 minutes. Just want to point out our S&P breadth chart here. We're not showing a lot of new boxes attempting to appear below. That's not what's supposed to happen in any type of bounces. So therefore, I'm also looking at that as an indication that on the S&Ps, the internals are just not wanting to spit out new profiles there on the downside for support, so to speak, with a new profile or new balanced area. So again, that's also relatively bearish. I also want to show you guys, you can also find these new profiles attempting to appear. I want to go to new box here. And as you can see, this is truly amazing, actually. I want to show matching results. Of the stocks in the S&P 500, these are the only ones that are showing new profiles attempting to appear today or tomorrow. And that's just kind of trendish in the same way, fashion of what's going on. This is actually, I didn't even notice this, but you can find these. I just went to new box. That means new profile attempting to appear on the dailies here, and that's the way that works. So right now I want to go into looking at the 10-year. Remember the 10-year, we're kind of getting it into some resistance here again, 127.11, 12. I'm a fan of not going short the treasuries. That's going to be something to contend with there, along with that 127.19, even a little bit higher up there. But again, not a big fan of shorting that. Let's take a look at beans. These are new crop November beans. Somebody in the den was pointing this out. Obviously, we've taken a hard look at beans, and we've said, absolutely couldn't have been short anymore above this 983 area. got up here, started getting some bearings on the thing again by getting below profiles. Finally, this is a super wide profile. But then, the 1005 area, we spoke about that a little bit, but what do you do with it now? Now you've got even a better situation, in my opinion. You've got stops above 95, or excuse me, 955. And in my opinion, we're going to ultimately see sub $9 beans. But again, the target's down below 910 right now. Up top, stops below 955. And on a short-term basis, you've got that 955, 957 up there. I'd sit tight and wait and see if we can get a little bit of a snapback rally into that area to maybe put some more shorts on here. Gold, no new situations here, except for a new profile that's appeared. And again, the long-term trend, when I say no new situations, 1110 up top, that may be where you want to wait until we rally back up into to kind of continue the trend down, get a maximum area of resistance up there. Breakdowns below 1080 are going to have to be paid attention to on the short side also. So 1110, 1080, big inflection points on gold, which the trend is still down on. All right, let's try to fit in the euro here. This has been something that's kind of got me out right now. I got to see this thing get back down below 110, 110.12. Right now, I'm not looking at this. This is again 109.48. The weekly unfair lows. I'd like to really see it get back down below to start stepping before we start stepping on the gas with this again. But right now in the euro, we got to get back down below 110.12. Just sitting tight, kind of sitting on my hands right now in the euro. So again, I love the yen trade, still a big fan of it. Anytime we get pullbacks on it, I'm just chomping at the bit to get long again. Now we've got back above 123.39. It's okay to be back in the water. We talked about that yesterday to get back into the long yen trade, or excuse me, the devaluation of the yen trade. And the dollar, we're going to close with this. Not a big fan of shorting this, and that's where the dollar sits with unfair lows at 96.10. That's where you're going to have to stay uncle below that thing. So stay tuned. Larry's next. Stay tuned for all the posts on TFNN all day. Enjoy the rest of your day, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.